So cash flow statement. So this is the question that we had looked at in class, and so I'm going through the basics of how we complete question 1 from the textbook. So I've already done the rough work. That's in a separate video, and the rough work is over there. I'll be referring to that and using that as I go through the question. So I have some numbers in already. So my operating profit I got from the abridged statement down the bottom. 38 grand. I then worked out my depreciation, which has to be put into the document. I got this depreciation from the rough work that I've done already. Total depreciation for the year we had listed as 32 grand. And the other thing that comes from this document is the fact that we made a profit of 32 grand on the sale of land or buildings that happened during the year. So those two numbers go in here. The depreciation is added back in because depreciation would have been a minus against the operating profit when we calculated the operating profit, but because it was a non-cash item, I added back in to cancel it. Profit would have been a plus, which would have increased our operating profit. So to get rid of that, take that out to work out, how much were the cash items in our that were accrued during the year. I'll take that away because this would have been a plus when I calculate my operating profit. I then look at the changes in stock, debtors and creditors, and I can see that they're the figures that we have in there. And remember, if stock's gone up, it means more of our cash has been used up to put stock onto the shelves, so that's why it's a minus number. Debtors decrease, we have less debtors, so that means they must be paying up, that's why it's a plus. If creditors have gone up, it means we're slower paying, so therefore if we have more creditors, we should have more cash in the bank, because we're not actually using that cash to pay people, so it should be still left in the bank. So the cash from activities is 50 grand. And that starts the second document they're doing, which is the cash flow statement. So the cash flow statement, I'm looking for a few different things here. So first of all, I'm looking for the amount of interest paid during the year. So we would have worked that out in our second document here. So the interest expense was 8 grand. And we paid all of 8 grand because there's no due at the beginning or the end, so we must have paid 8 grand in interest. Taxation, so how much tax did we pay? So again, we have a look over here and we can see that there was a charge for this year, 60 grand, and that's all due at the end, but we had 90 grand owing from last year, so that means we must have paid that 90 grand. And we haven't paid the 60 grand from this year. And that's standard what happens. Oh, and that has to be a minus number. So change the sign that because it's an amount of money we've paid. Let's just look at our dividends before we go to our investments. So the dividends, the amount we paid, again it says interim dividends, so that's 80 grand. So the charge is how much we actually paid because there's no dues at the beginning at the end, so therefore we must have paid exactly what the charge is. So now let's capital expenditure and investment. So how much money did we get? How much money came in from disposing of fixed assets? Not if we'd sold the fixed asset for a profit or a loss, okay, but we did sell a fixed asset, okay, so the amount of money, so this is going to be a plus, it's money we got, and up here the trade-in was listed as 60 grand, so I'm just going to change the sign on that. So 60 grand is the cash that we got when we sold our fixed assets. So that's a plus number. We then went and purchased fixed assets. Now again, we're back to our rough work that we did before. So we purchased land and buildings for 130 and we purchased machines for 80. Okay, so that's 210 was spent buying fixed assets. So 210 grand, and that's going to be a minus. The only other thing that can sometimes appear in here is, did we use our money in any other type of investments? Now in this case we did, because there are quoted investments. So basically we bought shares that are quoted in the stock market, so we invested money in shares. So that's going to be another thing that's going to go in here. So I'm just going to squeeze that in. So we have another use of our finance. No. So the cash that was generated, we used some of it to buy investment. So buying shares basically. In this case, we had no shares at the beginning, and now we have 30, so therefore we used 30 grand buying these shares. Okay, so that's that document done, and now what we do is we add up everything. Starting with the 50 grand net cash inflow, most of them are minuses, so they were taken away, and we'll be adding on the 60 grand that we got up here. So now, let's just move on, and we're looking then about, so we have a deficit, a shortfall of 308 grand, so how did we pay for that? Mainly it's financing, but we start off with managing liquid resources. So did we move money from our cash account, our bank account in this case, so this question is bank, did we move money from our main bank account into any other type of bank account? In this case we had government securities. So government securities are bonds, so this is money that we give to the government and they give us interest every year, and it's tax-free as an incentive. So we had 90 grand in government securities before. Now we've got 60. So that means we got 30 grand for cashing in our securities. So what you might find is in other questions they may list either up here in financial assets or in current assets a different type of bank account of some kind. So it's a long-term bank account, or something like let's say a building society bank account, something like that we put in there. So that could appear there. But anyway, we have cash came in from issuing these government securities, so that's a plus. Financing then is, were there any shares that we sold? Did we take out any loans? So now we're looking at the finance by section at the end of our balance sheet. So we see capital and reserves, and we're looking at then debentures. So our debentures were 60 and the debentures have now gone up to 40, by 40 to 100 grand. So we got 40 grand in from issuing debentures. Okay, and then did we sell any shares? Now the shares were 170, they've gone up to 400, so there's a large increase there. And our share premium was 0, now it's 20. So that means that we, when we sold the shares, we got an extra 20 grand. This is the cash. Remember, we're always talking about the cash that came in. So the ordinary share capital has gone up by 230 plus 20 for the share premium. So that means there's a total of 250 grand came in issuing shares. Okay, so now we start with 308. Okay. We're going to add on that and see, does it increase or decrease our cash? So it's minus 308, we're adding all the other numbers to that, and we end up with a plus figure, so that's an increase in cash. Ooh, I spelled it wrong. Now, so what we need to do then next is look at our proof. Is that actually what happened? So we look at the money in the cash in the bank account at the beginning of the year, and compare the end of the year and see, do we end up with the same increase in cash? Okay, so we go back to our current accounts here. So we see that our current assets, our bank figure was 28 at the beginning. Our figure at the end of the year is 40. So that means the cash has gone up by 12. So that means that the question so far is correct. Okay. Right, so that's the cash flow statement. So there's 3 documents we're doing. The reconciliation of operating profit we've dealt with. We're now moving on to cash flow statement, which has 2 parts. And then we're looking at the finance part of it after we've looked at what are the major bills that went out, and the second part of it is really how do we pay for it. We're on to the last document. So the last document basically looks at how indebted we are now compared to last year. So the net debt basically is how much savings do we have, that's a plus number, and how much did we borrow, that's a minus number. So we're looking at those two together. So we start with the increase in cash from the period that we got from the previous document of 12 grand. And what has changed that might make us more in debt or less in debt? Did we save more? Did we cash in savings? What? So in this case, we had government securities that have gone down by 30 grand, so we've cashed them in, and we borrowed another 40 grand. because our debentures have gone from 60 up to 100. So if we have 12 grand increase in cash, and we cashed in our government securities, that's savings that we got rid of, so we lost savings, that's a minus. And we borrowed more, so that's another minus. So we are 58 grand more worse off in terms of our debt now than we were last year. So then we have a proof that goes with this. So we look at how indebted we are at the beginning and how indebted we are at the end, and that gives us the movement in our overall net debt. So our indebtedness at the beginning, we're looking at all the cash we had in savings and our bank accounts, okay, and then we take into account our loans as well. So the figure that we're going to be working at here is, well, we had at the beginning we had 60 grand, okay, in borrowings. So that would be a minus number. Sorry. We had money though in a bank account, so we had 28 grand in a bank account, and we also had our government securities, which is 90 grand. So at the beginning of the period, we had 58 grand. We were 58 grand in the plus, in the red, okay? Sorry, in the black, they call it. So the net indebtedness at the end, so just quickly before I start putting the numbers in there for that, remember, I'm trying to show you where I'm getting my information from, okay? So we have our loan, which is a minus of 100 grand. So that's our debentures. And then we see, well, we have government securities of 60, so that's a plus number, that's savings. And plus we had money in a bank account of 40. So the net effect of that is 0. So that means we're not in debt, or we're not in saving. So the movement that has happened in a period is we've gone from 58 down to 0, so that means we're 58 grand more in debt than we were before. So that ties in, that's the proof. So the change in net debt is 58 minus.